I'd keep this short and focused on one point, and that is GAAP versus free cash flow. I'll have a link to the definition of GAAP, generally accepted accounting practices. So if you're not familiar with that, you can look at it. But the point I want to make is the difference between GAAP and free cash flow as measures. Accounting, particularly under GAAP, is a snapshot in time. In other words, for you to end up with a result there, you have to draw a fence around it time-wise, because business is a moving target. If it's in business, it's a moving target. So basically, with GAAP, your balance sheet is an instant in time, one particular instant. And your income statements are a measure over a finite period of time, whether it be a quarter or year, fiscal year, whatever, but it's a defined time. And the reason it's necessary, it's a way of comparing one business to another in terms of setting a value on the business, which is particularly true and necessary in public corporations, so that you can compare Ford and GM or whatever. So that's a very useful and valid tool. It's also a way that lending institutions measure the ability of the business to pay back a loan, for example. Although free cash flow is important to a smart banker. So the difference in selling covered stock option contracts is that I'm doing this for the revenue, which is an ongoing thing. The revenue stream is the part and parcel of the whole thing. It's the only thing that's important. So the big practical difference there is that GAAP would mark your position to mark to market, whereas free cash flow does not. Let me see if I can think of a way to explain this. I often use the analogy of comparing what I do to rental property. Okay, let's say I buy a house for $100,000 and I rent it for $1,000 a month. Okay, I'm interested in $1,000 a month because that's enough to cover my mortgage and cost associated with renting that house. But on a day-to-day basis, and certainly over a month, year, whatever, the resale value on that property will fluctuate, or it may go steadily downward. But nevertheless, the income from the rent continues as long as it's rentable and some tenant hadn't trashed it. But I don't have quite so many problems with stock options for a couple of reasons. Number one, it's short term, 5 days. Number two, I can change companies or the stock that I'm using to base the contracts on at any time. So at the end of it, when my current options expire on Friday, I can choose to either continue with the one I've been using as the underlying stock, or I could change to another company. These are advantages that I have over rental property. In defense of rental property, it does have the advantage that you can typically go out and leverage your investment by 70% because you can work with borrowed money on a scale that you cannot do if you're talking about the stock market. Okay, I think that pretty well covers it. Please ask your questions in the comments section, and I'll try my best to answer them. And I hope this clarifies things, because unless you understand the difference between GAAP and free cash flow, what I do is going to scare you to death because you will see the liquidation value of your account go up and down, up and down, and up and down, like your 401k would if it's invested in the stock market. Okay, thanks for watching. Please subscribe, like, and notify. Thanks.